Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox with us with the shipper update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Tuesday Carrier Update presented by PowerFleet. I'm Zach Strickland, and today we're going to watch tender rejection rates fall underneath year-over-year comps for the first time since we crossed over there in early March, last year's levels. So we dropped below the 5.58%. Now we did have a little bit of an uptick in tender rejection rates this time last year on the national level, which did eventually kind of mute out towards the end of the month. So we are seeing a little bit of a disruption in terms of a year-over-year true comp. But the point being, it's taken us a big solid month to ride this wave all the way up and down the level. Now we're back underneath where we were in 2019, so capacity returning to a much looser time than we started the month. We are still seeing a little bit of a moderating trend in that arena. Obviously, the closer we get to zero here, it just can't go much further than that. But we are seeing things kind of stabilize slightly to a little bit of a deceleration in terms of how fast these rejection rates are really falling right now. Again, Easter is maybe muting that a little bit, showing a little clouding in terms of those numbers. But so far, things are still softening, and we do think that it'll get down below 5% this week more than likely. So capacity is loose, but is there any hope on the horizon? Now, something that we track here is the customs, the import shipments. So these are counts of customs, clearing customs from China to the United States. And I've got a year-over-year seasonality view on this. The purple line is going to be last year's value, and you can see that noted trough there, early March. Again, a lot of that depends on that Chinese New Year that happens in late January, early February every year. And last year's, we were roughly about 50% underneath that value last year, or this year, hitting these bottoms down here around mid-March. The good thing is that we are now back over the top of what we saw last year in terms of year-over-year import volumes. So these are shipments. These aren't TEUs. These are literally just shipments clearing customs coming into the United States on all the ports throughout the country. It's not just Los Angeles or anything like that. So this is a pretty good sign in terms of inventory levels. Is freight going to be available in these warehouses, distribution centers, et cetera, so that when the economy does turn back on, hopefully sooner rather than later, and the coronavirus is a distant memory, but that means that freight will be available. Last year at this time, we were seeing, things really soften, but we had so much inventory in our warehouses, we didn't really have to be that concerned about it. We saw the impacts of the trade war and all that happening, and as everybody was moving intra-warehouse movements across the coasts and all that. Not a lot of long-haul freight at this point in time. Again, typically a softer time of year, but this is good news in terms of future freight moving through the United States. Looking at Los Angeles and Ontario, two of our biggest markets for these import volumes, as they come into the Port of LA, Long Beach, then they cross dock into a drayage rail provider. They go into warehouses. We saw a lot of this inventory stocking last year. We're not seeing as much intra-warehouse movement this year versus last year. If you look at these volumes are really sliding down below where they were prior to coronavirus in LA. Ontario just now getting underneath where we were prior to the big outbreak and all this big shipment volume increase. But yeah, Los Angeles is down way below that. That is not a great sign for you long-haul carriers that are operating out of Los Angeles right now. Ontario, really, more about even with what we're seeing. Again, a lot of warehouses, a lot of DCs out in this market. So we're just not seeing the same activity like we saw with the trade war back in the day. But inventory levels should be starting to perk up. In the rest of the country, I'm looking at the outbound tender market share. These are the markets in blue that aren't falling as fast. Every single one of these markets almost is falling simultaneously. The market share value's value in this situation is the fact that it's going to show you the markets that are slowing the least. So looking at our big chart, I've only got things over 1% on this side here. Atlanta, Harrisburg, still falling really fast. Market share values are plummeting. But Ontario and Dallas are not falling as fast. But you saw the chart. They're still falling, just not as fast. So carriers definitely pay attention to some of these green markets on the map. And that'll that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I'm Luke Falasca bringing you another broker update. Now, we're starting to see for the first time a real slowdown in the fall of volume levels and rejections. Not to say that we've hit the bottom. We'll have to figure that out. Maybe we have, maybe we haven't. That's something that we'll have to wait and see. But as of right now, the good news is that things are beginning to slow down on the fall. So this blue line here is the overall volume level in the United States. We're very used to that number. We only saw a very slight fall yesterday from today, and we're really trying to find that bottom here. We'll see what happens, but ultimately, as we look to see things that come back online, we'll look to this number to see if it starts to creep back up. Now, the orange line here is going to be those tender rejections, so that's going to tell us we're sitting at right about 5.1% right now. So again, that's also slowing down. We might break that 5% mark, time will tell, but just kind of remember, as that number does fall, spot market rates will fall along with it. If it goes up, spot market rates will rise along with it as well. So be prepared. We'll keep an eye on that number here to see what happens. But for the most part, it does look like things are slowing down. Now, something of note, as things slow down and volume levels do shift, not all markets or areas are created equal. So this right here is our weekly head haul change, or the 7-day change. So the markets in red and white are where capacity is continuing to loosen, and the markets in blue are where capacity is actually tightening. Now, that isn't to say that markets in blue have tight capacity. They don't. Capacity is still very, very loose across the board. But what it is showing is that over the past 7 days, say Ontario here, capacity has gotten tighter, which could signify that we've hit the floor in terms of like how loose capacity may be, versus some of these red and white markets here that you see are still continuing to loosen. So keep an eye on that. Remember, not all areas are created equal. It looks like a lot of Southern California here is trying to tighten up. That could be a lot of those imports coming into the country and shifting a lot of goods into those DCs, especially here in Ontario. So if you're moving freight, I might start focusing on some of these areas here in Southern Cal to call. Those will be some of the first areas to come back online. Also here in parts of Texas, like Houston's also beginning to tighten back up. And a lot here on the western part of the country. Still very loose here in the middle of the country and all along the a lot of these big areas here like Atlanta and Harrisburg, Pennsylvania, still very, very loose and continuing to loosen. That's the key part. Everybody knows that for the most part, freight is very loose right now. There's a lot of capacity, but you have to know which direction is it moving. Is it continuing to loosen, or is it finally showing signs of maybe heading back up and tightening up? So keep an eye on that. Now, we're going to focus today on the Ontario market. It's the second largest market in the United States in terms of volume, second to Atlanta right now. Now, we've seen a lot of these markets have fallen, but what's interesting about Ontario is it's really only fallen prior to this coronavirus surge that we've seen in volume. So this blue line is the volume level. Focus on the blue line for the moment. We saw right at the beginning, right at the very end of February, this massive surge up in volume levels. Okay, no surprise there. We surged almost 30%. And we've come back down. We know that we've come back down. There's no surprise there. Everybody knows that. But what's interesting is right now, national volume levels have fallen way below where they were prior to the coronavirus, versus Ontario is actually holding up fairly steady. It's really just fallen back down to its normal levels where it was back in February. Hasn't fallen below. We'll see if it does hang out there. It looks like it wants to, but ultimately we'll tell. A lot of that could be due to those imports that are finally beginning to increase again, coming into the port of LA and Long Beach. So if you don't have a customer in the Ontario area, I would definitely focus on trying to call in that area. There's an increase of freight. Also, the green line is the rejections. It looks like we're sitting at about 3.7% there. That's hanging steady as well. So hopefully this is helpful for you. I'm Luke. That'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, today we're talking about the Case Freight Indices that they come out with every month. This came out at the end of last week, so it gives us a little insight into the March data. It's an alternative data source to our OTVI and our capacity indices like outbound tender rejection index. So I think it's a good point in time to compare these to our data and see some of the differences and some of the things that are like. So this is the Case Freight Index for shipments. This is overall shipments. It's not only truckload freight, but it includes some intermodal as well. So this is year over year down 9.2% in March. This was an acceleration of the decline. It was down slightly in February, but it declined even further in March. And this looks a lot like our outbound tender volume index right now. So currently, that's the data as of yesterday. I think that's the 14th. We're down 9.5% year over year. So volumes have fallen. Of course, this is where we pushed 30% above year over year back in the middle of March, but things have fallen off a cliff. And like I said last week, there doesn't seem to be a floor in sight, although we are slowing down the acceleration to the downside.
Right, and as you mentioned, that deceleration has been much more rapid than the way up top. And so when you're seeing like we're getting down to a slowing effect, it seems like, when do you expect to actually hit a bottom?
Well, I think it's going to all depend on how far we are away from the reopening of the economy. When businesses understand that they're going to be back open, let's say in 3 weeks, they might start preparing for what they're going to need upon that reopen. So they might start bringing in some freight, getting some freight moving. So that'll have like a push-up effect on freight volumes. But right now, it seems like we're not going to have even a gradual beginning of the reopening until mid-May or late May, at least another month. So I wouldn't expect this to trough for another 3 or 4 weeks.
Got you. And Andrew, when you're thinking about, we're hearing a lot more about the reopening of the economy and things like that. Curious, do you think that this is something that can happen organically, or will we need some kind of push?
Well, that's the thing. I had read that the federal government hasn't actually locked down anything. This has all been businesses and localities that have shut down. So I don't know what their reopening of the economy is going to be. I don't know what their authority in saying everybody has to go to work or what that may be. But I think businesses are just going to take it as they need to. I mean, companies like FreightWaves, they've realized that we can do a lot of our work from home. So we don't have this desire to be pushing back to work. But retailers that are selling goods rather than services, they know that they have to have their doors open, even if people are afraid to get back in there. So I think that they're going to have a push. As soon as they feel they're able to reopen, they're going to try to.
Excellent, excellent. Any other charts for us today?
Yeah, we got one more. So this is the Case Freight Index on expenditures. Again, this is just truckload freight. We have the overall freight after this one, but this is year over year down 6.6% in March. I believe this hasn't troughed either. I think April is going to be down even further. The coronavirus started as a worry about Chinese production, but it's now quickly transitioned to a U.S. and consumer spending problem that we're afraid of them not being able to spend. And so no businesses, no jobs, and no money being spent means that no freight's being moved, and no volumes means that rates are going to be down. So I don't believe that the volumes have troughed yet, and I don't think rates have either. I think April will likely be the worst of it for the truckload carriers.
Right, and you hit on a good point there. I think many of us, we went through this long March, right? It just seemed like the longest month ever.
Yes.
And that just ends the first quarter. But one of the things that we're forecasting and expecting is that the second quarter is going to be one of the hardest hit segments of 2020. And so just as you mentioned, the worst might just be ahead of us when we're looking at volumes and really economic impact overall.
Yeah, the first quarter was bad, but there towards the end of it, we got a sugar rush. The carriers did at least, and some of the shippers that are moving food and consumer staples and medical supplies. But this second quarter, this April and maybe the beginning of May is likely going to be even worse because you're feeling the problems where you moved all this freight and now you're moving nothing. So I think the early Q2 is going to be really rough on people, but I do think that in the back half of the second quarter, I think things pick up pretty quickly. I think wider retail will open. I don't know if it will have a snapback with big durable goods, but with non-durable goods, eating out, and retail, I think we'll have a pretty quick coming back to normal levels there in June and July.
Excellent. Andrew, thank you so much. Insightful as always. And thank you so much for tuning in. That's going to do for this Tuesday edition of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms. Thank you so much for tuning in, and we'll see you on the next episode.